I'm going to try sharing my screen now. Let me know when it kind of pops up here. Let's see.
Yeah, it's all good.
You can see it. Great. Thank you so much. So thank you so much for inviting me to do this presentation today. And as Connie kind of said, we're going to take today just to go a little bit further from last session. She invited me just to talk a little bit about identifying sales opportunities and tax returns, financial statements as well as corporate org charts. So I did want to quickly go over that as well as discuss a little bit about two other things as well, right? Before we start, I just wanted to, quickly put out my disclaimer slide here. And for the agenda for today, I doubt it'll take 2 hours. It's, we'll take as long as we need, but really we're trying to cover, mainly three things here. I wanted to start off quickly just by, going on our tax and estate planning group website, as well as talking a little bit about, some of the services that they do offer. From there, we go into kind of the bulk of the presentation here, really looking at, fact-finding documentation, kind of going over a little bit for one of those two tools, the fact finds that Connie had shared in the chat already and how they can be used, as well as then further going into the shorter form fact find, and last of all, going in and showing you how the Canada Life financial underwriting tool looks. It was created by the financial underwriters over at head office. So even in my role here, I find it extremely useful when it comes to discussing cases with our advisors here. Right? So. Just very quickly here, in our tax and estate planning group website, and it's really this link right here, and I'm sure that we can send out slides afterwards. But it really, if you just type in salesstrategies.ca, it will get you there as well. And oh, great, I can just kind of pull this over. So this is this website, and it's our tax and estate planning group website. And why I wanted to show you is because I find that it is one of the most useful tools for purposes that I have. And looking at this website, it's relatively plain. And when you start scrolling down, you'll see more stuff. But at the very top left here, if anyone actually goes on this site before today. They have this box here that kind of shares all the new information that we have in relations to what Canada Life's tax and estate planning group pushes out to the marketplace, right? So as of right now, there's some sort of podcast here on loan to corporations versus loan to shareholders. The 2023 tax rates are, inputted in there. There's also two articles here. One is for postmortem planning for business owners. And I find that one extremely useful when we're using it for discussions with accountants, with clients' accountants. A lot of times when they ask me about insurance in relation to postmortem planning, this is one of those articles that I refer to have our discussions with them. So it does a really good job in talking about, the 164.6 loss carryback as well as pipeline planning in tandem with life insurance. Second one, the last one there is really this insured shared donation strategy for business owners. So if you were to scroll down, this is really our team at the Tax and Estate Planning Group over at headquarters in London, Ontario there. So three of these guys here, Nick, Stephen, and Marco, they actually used to be wealth and tax planning consultants, and they were promoted to this to become directors as well as managers of that tax and estate planning group. And they're really there us, the regional wholesalers, when we face extremely complex cases and we want to reach out to them for some sort of additional comments there. But in addition to that, the resources here are really, really what I wanted to showcase, because I do find that, a lot of times our advisors, when they have questions about certain aspects, certain situations, I find that, a lot of those questions can sort of be answered by the articles in here, right? So if I just click into this view article here, once I click into it, there's a very, very robust list of, buttons here with different, with a library of different information. So let's say, we were looking at, like corporate owned life insurance, right? It was under that section. So we clicked into it. it kind of goes on to detail a lot of the different articles that Canada Life has in relations to that, right? So one that I find very, very useful, once again, for my purposes when I'm discussing with clients, accountants, is this accounting for life insurance article here, which I do send quite often to accountants in order for them to really understand on an annual basis, as well as upon death, what the journal entries are in booking those type of insurance related transactions, right? So really that's the gist of it. I'll just click into one just to show you, but it does host a very, very robust library of information in there. There's also presentations as well as podcasts for anyone who was interested, and as well as continuing education credits with webinars that are available, presented by the Tax and Estate Planning Group, right? So that's really, the gist of our Tax and Estate Planning Group website. I find it very useful, and I highly encourage, all of you guys to take a look at it if you have a chance, just to kind of explore it, see the type of support we offer, even from this website itself, right? Next thing that I kind of wanted to quickly discuss as to a resource that we have is our Ask First Tax mailbox. And that's the Ask First Tax at canadalife.com mailbox down here. So what this mailbox is it's ran by a group of CPAs over at head office, and they primarily deal with in-force policies. So in-force policies from Canada Life, we often get a lot of questions in relations to, potential tax applications questions, right? Or specific in-force questions or transaction questions, right? So, for example, policy transfers, loans or surrenders, or even non-resident situations and tax exempt questions. And this is really that mailbox where we send our question off to. And, this team, like I said, they're a team of CPAs. They run this mailbox, and, their role is really to answer these enforced questions. So they are able to provide answers or, insight, I would say, into the sort of questions that, you may have in relations to that enforced policy itself. Now, going on and really starting our conversation about, fact finding, identifying some sort of sales strategies there. First of all, it's very important that we have the appropriate facts. We need the facts about the clients in order to recommend appropriate planning as well as product solutions based on their needs. So in a lot of cases, when we start off our conversations, it's very vital that we do a good fact-finding meeting first, right? So for the individuals that's, worked with Connie in our initial meeting, one case, we have a few meetings, and the first one really is about fact finding, as well as having a good understanding of what, the client situation, the client structure really looks like, right? So a good fact finding meeting will include quite a bit of information about the client. And, after that fact finding meeting, it's important for you to obtain important documentation. And this usually includes things such as the personal tax returns, financial statements, the corporate organizational chart. And, if I was to look at these three for our initial meeting, the best, I'd say, just to get started, it's important just to have a corporate org chart for our conversation, just so we understand, just from a very high level point of view, what the entire situation looks like. And that's, just by having that, it's already a lot easier for us to kind of dive into what type of information we may need, right? Like if we're looking at that org chart and there's a trust in place or some sort of partnerships in place, we know that, okay, well, in addition to the normal things we ask for, like the corporate tax return, the personal tax return, these are some items here that we may want to look at just to understand how it's linked with their entire overall planning, right? So we will look into, these three types of documents in a little bit more detail so that we can understand them a little bit more and potentially find wealth or insurance-based solutions to help the client. Now, before we do go into it, and, in most cases, before we actually gather all of this information, one of the first steps that advisors usually do, or that we usually do when we meet with advisors, is just have a quick fact-finding discussion, like I said earlier. Now, on our Tax and Estate Planning Group website, once again, under those article section, there is this button. It's called the estate planning button. And if you click into it, there's a whole library, once again, of articles there. And in that library there are two fact-finding documents which we have. I believe that Connie's already shared them in the chat with everyone here. But I just wanted to, quickly discuss both of them, right? So the first one is long-form fact finder. And this long-form fact finder, I was not able to put the whole thing on because that would take up the entire presentation. But what I wanted to do was just kind of show you what it looked like, right? On the first page, it's really simple. It's just kind of shows you, what the client's name and date is. Second page, now that's the table of contents there. And you can see it's a very, very long list and a very, very long PDF there, right? So it's 20 pages long. And, from my end of things, I would say that it's very, very comprehensive, and it really does aim to gather pretty much as much of the information from that client as possible. So you have things such as, the personal information. They even provide you on page 4 with a list of documents, which normally, people would have, or advisors as well as us would like to obtain for our purposes of, looking at this case. Page 3, sections 3, 4, 5, they go more in depth into the overall estate planning of the client themselves, the retirement planning of the client themselves, as well as the business and how that looks, right? So once again, it's a very, very robust list of fact-finding information. That's 20 pages long. And I think that, from how I see advisors really, really using this in a very helpful manner is kind of going through it and not really using the entire thing. It would be great to use the entire thing for sure. But in a lot of cases, I find that advisors usually look at understanding of, what type of information we may want to ask the client and kind of tailor it down to understand what type of questions, or almost as a quick memory of what we should be asking them, right? Now, the short form fact finder, that's the one that I definitely see being used more often than not. And, you can see already that there's a huge difference between the short form fact finder and the long form fact finder. In this case, I've put down 2 pages of the short form fact finder onto this PowerPoint slide here, and that is the entire short form fact finder. Whereas for the long form, the first 2 pages, really it was more so talking about what was included in that long form fact finder, right? And, of course, the short form fact finder does have a lot less questions than the long form. And I would say that it primarily focuses more on the corporation itself. It's still very, very useful. And, I think that from a very high level point of view, especially if it was if we didn't have the information like the corporate org chart, the T1 personal tax return, the T2 corporate tax return yet, this would be a very, very good way of just getting a high level understanding of what we may need and how complex that potential case would be, right? So I just want to take a little bit of time just to go over the questions that are here, as well as having an understanding of why they kind of ask this, right? So first of all, who owns what shares of the company, including a corporate org chart, would definitely be very, very important here, especially if they have quite a few entities in that corporate org chart, right? If you're looking at more of a simple, situation where, let's say you have a few shareholders, 1 or 2 shareholders, let's say they hold like one holdco and one opco, it's pretty easy for us to kind of detail that down in this box here. If it gets more and more complex, there's shareholders involved, there's a lot of, operating companies or even like family trusts, as well as, let's say, partnerships, as, in most cases of real estate developments you would see involved. That's where it may lead to an issue with filling that box out, right? So in those situations, having a corporate org chart that kind of details that situation, that's client situation, would be probably what I would say is the most helpful, right? Second of all, are these shareholders related? If so, and how? A lot of those cases that we see, depending on what type of ownership it is, it really helps us in understanding what type of potential plan the clients have for the future, right? So let's say it was owned by a family, right? And, the shareholders of that corporation were really, let's say, spouses. And in that case, it would be an understanding as well as discussion potentially with the clients, legal or tax advisors or accounting advisors as to what type of planning do they potentially have in place for this? Are their wills are their wills properly drafted? If so, what does that reflect? Are they, potentially looking at using some sort of spousal rollover upon the death of the first spouse? On the other hand, let's say they're not related, right? Then it's an understanding of, well, if they're not related, is there some sort of buy-sell agreement in place, right? And if there is a buy-sell agreement in place, do we have the proper mechanics, the proper funds in order to fund these sort of buy-sells if anything was to happen to one of these individuals, to one of these shareholders, and, the buy-sell agreement was enacted, right? What's the current value of that business? So valuing a business, that's completed by CBVs there, right? So most of the time here, when we're looking at the value of the business, it's important for us to also talk with the accountants just to have an understanding. Just from a rough estimate here, what is the potential value of that business that they're talking about? Potentially, in some cases, if they're doing estate planning in tandem with insurance planning, they may have done some sort of estate freeze. And in that case, they might have a good valuation of the corporation itself in order to have those preferred shares in place, right? So with that being said, having the value of that business really helps in understanding, is there a potential impact to the shareholder upon their death? If there's a deemed disposition, what is that value that potentially could be deemed to be disposed of, right? Or even in addition, if they have preferred shares and they're looking at retirement planning, how much of those shares are they winding or are they redeeming on an annual basis to take down that tax liability, right? What's the adjusted cost base and paid up capital of each share? So that's also, in tandem kind of with question 3 there, helping in estimating potentially what the capital gains tax liability could be there. Have they used their lifetime capital gains exemption, or is it going to be part of their planning, right? How the business is performing presently and how the business owners think it will perform in the future. So that definitely gives us a good idea of, what the overall situation of that business is, right? Like in a lot of these scenarios, and you will see when we go over the financial accelerator tool later, in kind of calculating those insurance needs, under our financial underwriting guidelines, we do allow for growth of those shares if they're common shares, or other assets such as, let's say, marketable securities, rental properties. We can grow those assets for a number of years at a selected growth rate, and just understanding how that business is performing will give us a better understanding of what type of rate might be used for that purpose, right? How's the business owner compensated, salary versus dividends? Ask for the details there. And number 8, like I said earlier in discussion of that question number 2, if we're dealing with 2 or more shareholders, are there buy-sell agreements in place, right? If they are a family business, wills indicate whom the shares will go to at death. If they go to the spouse, who gets the shares when the spouse dies? So a copy of their wills allows us to really understand what they're trying to accomplish upon the death of the individual, how their assets will kind of be split or distributed to their heirs, right? Are there any children involved in the business or not involved? Will they become involved, right? So that really leads to business succession planning, as well as discussions as to, potential, what type of planning could they think about doing in place to get these children that are going to take over the business into the business at a right time, right? And for the children who are not involved in the business, there comes questions such as, okay, well, if they're not involved in the business, are there, some sort of ways to really equalize that estate for those individuals, right? I think for a lot of business owners, a lot of their wealth, a lot of their net worth is kind of placed into their business. And it's really at the bulk of their net worth is their business. So for individuals who are not taking over that business, really, how are they going to get a share of that estate in an equalized manner, right? Will the spouse or family have income if one of them, if the shareholder spouse dies, right? So looking at, potential conversations for DI, CI, or even income replacement life insurance, right? So what are the business owner's plans for retirement? Is there currently a investor? If not, what will happen to that business? Keep people there. That's another there, or even outstanding loans, right? So upon, the death of an individual, are there some loans that they may want to cover just so that they can understand, okay, well, these loans are taken care of now, and this surviving spouse or the children won't have to worry about these, right? And of course, determining if they want to look at a corporately owned or individually owned life insurance policy. Once again, that's really important to determine, not even just what sort of insurance they have in place and where, but understanding from a corporate structure, generally where might be a good idea to place that insurance policy for their situation, for what they're trying to accomplish here, right? So, by doing that proper fact finding, I find that, a lot of times we're able to really go on with our conversations and have an understanding of, well, from that fact finding with the client, we were able to detail this sort of information. And from there, we have a much better understanding of what we should be obtaining in terms of documentation from the client themselves, right? So before I did go on and talk a little bit about personal tax returns, if there's any sort of Q&A or any sort of comments, more than available.
Yes, Leon, thank you for just stopping a bit for the questions, because there's a question coming up from Tracy Lowe. She asked, is there any difference between the farming business and the regular small business? Because you mentioned a little bit about the farming business, right?
Yeah, there's definitely a lot of differences between the farming business as well as a regular qualified small business corporation. And, the differences there really, I would say, relate to the fact that farming fishing corporations or entities usually have a bit more of tax advantages from the Income Tax Act, right? So, for example, here, I would say that the lifetime capital gains exemption sort of farming or fishing businesses, it's a little higher. It's at $1 million, whereas for QSBC, it's not as high. I think it's relatively close at $900,000 this year. I'm not quite certain of the amount right now off the top of my head, but it's not yet at $1 million. Farming and fishing businesses also get a bit more advantage in terms of inter vivos as well as inter vivos rollovers, as well as rollovers at death, in order to really help pass down those sort of that corporation or that partnership or those sort of properties to the next heirs. Yeah.
Thank you, Leon.
Okay, great. Okay, so in next section here, really just wanted to quickly cover, personal T1 tax return. I found a way just to, pull the T1, some of the sections of that T1 out just to quickly talk about it. And I'd say that, the client's tax return tells us a lot of very, very important information. We can look at it a few ways. First of all, it really tells us in how your clients get paid, right? So for non-business owners, you're most likely looking at all employment income, right? Business owners, it could be a variation of salary or dividends, or both, right? So in a lot of cases where we're talking with high net worth individuals who operate as professionals, so things such as doctors, dentists, they do some sort of, them along with their accountants, they usually do salary and dividend planning on a basis, just to understand, from the tax attributes that my professional corporation has, how much should I be paying out in salary to myself and how much should I pay out in dividends? And most of the time it's an understanding of, okay, well, dividends, let's pay it out according to the tax attributes that we have in that corporation. But at the same time, we may want to pay out salary just to, ensure that salary room can help boost up our RRSP contributions that we might be able to do, right? It also allows you to understand the amount of income your client earns, the location of your client's investment incomes, whether it be non-registered, registered, or even if they have a corporate investment portfolio. I'd say that, the corporate investment portfolio, really looking at the financial statements and not really the tax return there. Types of non-registered investment asset classes your client owns, and potentially amounts based on types of reported income, as well as potentially whether or not they have an interest in donating, in charitable donations there, right? So how much you and your client gets paid, right? A lot of times it's really looking at this general total income slide right here and understanding non-business owners, most likely, all employment income, right? Most of the time you'll see them appear in this box here, box 10100. Planning discussions, like I said earlier, for these type of individuals, potentially, can we contribute to a TFSA, whether or not it should be a contribution to a TFSA or an RRSP, and, from federal budget 2022 for maybe potentially some younger clients who have not bought their first homes yet, the FHSA, right? First house, that savings account there, whether or not, those contributions, and if that should be made, right? That also helps us in understanding potential life insurance needs as well as opportunities, right? If that's the type of employment income that they've been receiving, the family requires that sort of income on an annual basis just to, keep them afloat or whatsoever. Is there some sort of need for protection for those clients, or even for, let's say, more well-off clients? Is there a tax advantage growth that we could be looking at for the cash value in a life insurance policy? Disability insurance, right? Whether or not there should be a top-up for high earners. Now, like I said earlier, for business owners, really, it could be salary or dividends. And depending on the sort of planning that they usually take with their accountants, it could be a mix of both, just to, contribute some, just to be able to, create some room for RRSP deductions there, right? So planning discussions there could include a few things, such as paying out income from business not needed. If you do not need that income, maybe just keep it in that corporation itself. When we're looking at corporations as well as shareholders there, the corporations, they incur one level of tax when they're earning income there. Pay it out to an individual, that usually incurs another level of tax there, right? So if that income is not needed, should it be retained in that corporation just for other purposes, potentially, let's say, earning passive income, right? Now, self-employed, usually that's like sole proprietors not carrying on business through a corporation. So let's say in some cases you have individuals who are, let's say, starting a business, but they haven't incorporated yet, right? So those individuals, their income, their expenses are recorded on their T1, similar to, individuals who are just earning employment income, right? So that usually occurs down here, and that's where you'll see the self-employment income there. Now, I just want to do a quick kind of conversation for the difference between employment and dividend income. So dividend income, tax rate on the dividend income is much lower than tax rate on employment income, right? It's not subject to a variety of payroll taxes such as CPP, EI, employer health tax, or workplace safety and insurance board, right? So it results in no CPP retirement benefits or EI benefits, right? So that's one con of it. If they wanted to do this sort of pay these sort of taxes in order to make sure that they have these sort of benefits in the future, then it requires employment income to generate that, right? And the reason for that is because it doesn't generate earned income. So it doesn't actually create contribution rooms for RRSPs. In addition, the dividend gross up increases that total income relative to salary income. And it would have more of an impact for individuals, let's say if they're already receiving old age security, right? Because that can trigger or increase that risk of a clawback on those benefits that you might receive, right? On the other hand, employment income, tax rate on employment income is usually much higher than dividend income. They're subject to those payroll taxes. The contributions would have to be made for CPP, but that also results in the eligibility for CPP retirement benefits. And on the other hand, that really generates earned income for income tax purposes and therefore creates RRSP contribution, right? So if you're taking out income, that's earned income. There's a calculation for how much RRSP you're allowed to contribute on an annual basis. And, that allows you to actually contribute to your RRSP and take advantage of that RRSP plan as well, right? Registered plan as well, right? So for our purpose, just as a very quick sort of looking at how that really translates into our financial underwriting accelerator tool, as well as an insurance need sort of look is, income replacement. Usually we take that as an availability for just financial justification, right? And it's available for active income from a few sources. So active income, right? So employment, so T4 income or net income from business activities, that usually can just be a factor that we can use for the purpose of calculating potential need for income replacement. It's important for me to note that, income replacement does not include passive income, such as capital gains or rental income. And, we kind of have a guideline here that we use just to look at what the potential income replacement multiplier could be, right? So let's say the client's 36 to 40 years old. He earns around $100,000 on average a year. Then, you can apply a 20 times average income multiple to that income earned for the purpose of calculating or estimating that insurance need, right? So going on into our T1 and further down that list, you can see that, there's other things as well, right? Non-registered accounts. Is there any sort of taxable amount of dividends from taxable Canadian corporations that are being received, right? That really helps in identifying, potentially how big is their non-registered portfolio, potentially what size it is, as well as helps in identifying what asset class it is, right? So, there's interest and other investment income or taxable capital gains. That's all good indications of how much, they have in there. Registered accounts, next slide, we'll talk a little for rental income. That's really on this line item right here. That really provides us with, okay, well, that's the rental income that they're generating, as well as taxable capital gains, potentially if they have sold some sort of rental property there. And by looking at that, that really allows you to understand, okay, well, let's go down further to T1 just to understand on a form by form basis how many rental properties they have. And, really all in all, I think helps in understanding potentially what type of other assets that client has as well, right? Like if they have non-registered accounts, if they have registered accounts, if they have real estate, then should we be gathering information for those assets in order to understand potentially what type of impact they might have on his overall planning, right? Trust assets. So, potentially they might be a beneficiary of a trust and, whether or not they get some sort of other income from that trust itself, which can allow us to understand or even dive further into conversations with the client as to whether or not they will be obtaining other assets in the future, right? Now, registered accounts, going on back to there, these line items really help in understanding, are they taking RRSP deductions? Are they still, doing deductions and contributing to their RRSP? Or are they actually pulling out income from their RRSP on an annual basis, right? So really, when we look at that and we have a better understanding of the other assets that they're obtaining income from, then that really drives us to have a better understanding for what documentation we may want to obtain. So, from the earlier slide, let's say they had non-registered assets we may want to obtain their statements there related to their fair market value, their adjusted cost base, for us to understand potential impact from that, right? Registered assets statement showing that fair market value there, as well as real estate. Most of the time, we would be looking for things such as, what's the property assessment value here? What is that fair market value estimated as of right now? Do they have any loans, right? Like I said earlier in our conversation, debt coverage, it could be an important factor in our conversations with the clients as well as the adjusted cost base of the property owned. So the property itself, like what did they buy that property for? Potentially what type of gain could there be if they were to sell it, right? Or if it was deemed to be disposed of. So that's really the sort of information that really I get in when I see the T1 and I see what type of income they're earning. It leads me to drive further and look into different information there, right? Very, very quickly for, once again, we'll cover this a little bit more in our financial underwriting accelerator tool, but for assets like that, investment assets, rental properties, things like that, we're looking at potential growth and growth in number of years as well as rates, right? So our guidelines, we're looking at potentially usually ranging from 0% to 6%. So 0% would be things such as for shares. So things that are already fixed in value and they're not going to grow. Like most cases, when you're doing an estate freeze, the parents are taking back preferred shares that are fixed in value. And as part of their planning, they take back fixed shares because they want to fix in that potential liability, right? So those assets wouldn't grow. Whereas let's say they had residential rental property. Well, if you have it in, let's say, Vancouver, it's going to grow in 20 years. So they allow for a higher growth rate in calculating that. And depending on the number, on how old that client is, that can really help in understanding, okay, well, from Canada Life's financial underwriting guideline, far of a horizon can we project this to be, right? Now, there are, of course, assets that are not located on the tax return, which could still be useful for your purposes, usually for, let's say, understanding retirement planning, right? So, for example, TFSAs. TFSAs would not be reflected on your T1 registered education savings plans, right? That's not going to be reflected on your T1 as well. Registered disability savings plans, that's not going to be in there as well. Corporate investment portfolio or even locked in registered plans and individual pension plans, those assets won't be located on the T1, but could still be factors that you may want to discuss with the client about. Last of all, on the T1 perspective, charitable giving. That really helps in understanding, is your philanthropist, right? And the T1 on Schedule 9 of that T1, it really does show you what type of donations are they making on an annual basis, right? And there's a lot of conversations that we can have when it comes to charitable giving and planning by understanding client situations, such as, potentially, should they be looking at donating marketable securities or, potentially looking at life insurance as a way of planning for their charitable giving purposes, right? And, if further on, I feel like it may be important just for us to have more conversations about this, especially since, we do have a robust list of alternatives and options for charitable giving purposes. So just kind of showing, marketable securities here. And I find that, it's important for us to detail this as well. Let's say, the adjusted cost base was around $30,000 a year, right? So donating of, let's say, marketable securities, it is very valuable degree. So let's say they donated $100,000 of it. Their tax savings from that charitable donation, approximately a 50% tax rate, you're looking at around $50,000. The capital gain realized on a normal basis would be $70,000. And that's just if you're taking 100,000 minus what I assume to be 30,000 in this adjusted cost base here. But when you're donating marketable securities, there's actually capital gains included of zero, right? So there's various ways of understanding and planning what's the most appropriate method of, accomplishing their charitable donation strategies with what they have, with the assets they have on hand there, right? So before I go on and talk about corporate financial statements as well as tax returns, do we have any sort of questions or comments? Connie?
No questions so far, but I just want to add on regarding the assets, the percentage of the ownership. Because, Leon, remember a lot of time when we work with advisors, they provide information about the assets, for example, investment property, investment portfolio. And one thing that we need to also look into is who is the ownership, right? And what is the percentage, right? Maybe you can, just touch on that a bit, please.
Yeah, so it's very, very important to understand the percentage, through the fact finding, through the tax returns, and, in most of these cases here, we're talking about corporate ownership too. Just understanding what type of ownership they have in that corporation. So not even just what type of shares they hold, but the actual ownership. Let's say you have different shareholders, different family members that own it. The actual tax liability is that the deemed disposition that takes place occurs on that individual level, right? So an individual is deemed to dispose of their assets at their level. Depending on how much ownership they have in a specific asset, that will affect that potential liability there. Yeah.
Okay, and Leon, Tracy has another question. She is asking, how do we calculate the business market value in the statement in a simple way?
Yeah, so that's a very good question. If you're looking at actually calculating and coming up with a fair market value for a corporation, CBVs would be the ones that do so. They are the ones who really do the valuation of a business itself. Accountants, the client's accountants probably have a relatively good idea as well of what their corporate value is. In fact, in a lot of the cases in a lot of situations where clients are looking at doing some sort of estate planning, doing some sort of corporate reorganization that involves freezing of shares, they will do a valuation of that business in order to freeze the shares, right? That is a good indication of what the value is as well. When we're receiving financial statements, and a lot of cases that we work with, we don't actually have the value of the corporation itself. And what we do is we take those, we work with our underwriters just to come up to what is a reasonable estimate, right? And the value of that business when we're looking at it is just, okay, well, from our end, we're looking at insurance needs. What could be a potentially considered as a reasonable value for that business, right? So there's a few ways to do it that I've seen. One of the ways really from the underwriter's point of view is just understanding on a basis of their assets less their liabilities, what is the value there, right? And when you're looking at statements, the numbers reflected on the financial statements might not be a good reflection of the fair market value of those assets itself. So let's say your corporation holds real estate, right? They might have bought it a long time ago. The values on there are most likely at cost, and it would not properly reflect the fair market value. So, that would entail understanding what the fair market value of the assets are, or an estimate of what the fair market value of the assets are, less the liabilities, right? Another way that they sometimes just kind of guess or estimate the value to come up to a reasonability testing is looking at the income of that business itself, and looking at potentially other companies that they've done underwriting on, just to understand from a earnings multiple point of view, applying that to the income, what type of value they're coming up with there. So it's I guess the answer to that is only CBVs can do real valuations, but in terms of our purposes, we're usually just coming up to an estimate of the value. Yeah.
So can I saying that it's quite similar to a personal individual case, right? We look at assets minus liabilities, like kind of the net worth inside the corporation, as well as the income, right? The earnings.
Yeah.
Cool. Thank you.
Exactly. Great. Okay. So corporate financial statements. Now, which financial statements are relevant in documentation gathering? I'd probably say there's a few: balance sheet, income statement, T2 corporate income tax return. Balance sheet, a lot of times I find that a lot of individuals focus on the retained earnings, and the retained earnings don't actually tell us the full story there, right? Retained earnings, in most cases, what that number provides us with is a cumulative understanding of throughout the years that this existed, what are the cumulative earnings less dividends paid out of the corporation, right? Importantly, I think it's very important for us to look at what, the assets value, the liabilities value of a financial statement, and just having an understanding of, what indication is there that they're able to actually fund this policy, right? So looking at cash balances, investment asset balances, right? And that's a good indication of how much they have in order to actually fund the policy, right? But with that being said, it's also important to understand liabilities, right? What type of liabilities they may have that they need to pay out, right? So just looking here, once again, I feel like a lot of times we focus primarily on that 818,000, the retained earnings there, right? But, a lot of times when I look at a corporate financial statements, it's also important to understand what are we looking at in terms of their assets and their ability to fund a policy, right? So in here, you have cash and marketable securities, which is a relatively good indication that, there is liquid assets that can be used to potentially shift the funds over to funding a life insurance policy, right? It's also important to look accounts payable. In this case here, it's good that, the accounts payable was relatively low, $70,000. You would kind of assume that, in the next few months, probably after this year end, that cash, 70,000 of that would probably have been used to pay off the accounts payable portion of that, right? Income statements, they're really good in helping to provide some understanding as to earnings, profits for a company's fiscal year. Also provides information such as, management salaries and bonuses. It could help in indicating what the client is receiving, albeit the client's personal tax return would show this information, as well as showing what type of income is being earned in the corporation itself, right? So whether it is business income, investment income, if it was capital gains triggered from a sale of assets or rental income. Corporations, they can purchase almost anything, and I say that almost anything an individual can. In our conversations, most of the time for Connie and me, we're looking at corporation point of view. We're looking at corporate org chart, potentially where a policy could be placed, as well as, needs there. And so our conversations are mostly derived around life insurance, term or permanent, as well as critical illness insurance and disability insurance there. Right. Now, T2 corporate income tax return, and I just kind of wanted to quickly cover this just to, show what type of information it can tell. From the T2 corporate income tax return, the first page, it does show a few interesting things that I find relevant. First is the business number, business name. Second would be the tax year. So what tax year is this actually applicable to, right? Normally, when we're gathering financial statements and tax returns, we want the relevant ones would be the most recent ones that we have, right? I fully understand, depending on what month of the year you are in, your latest financial statements might not be the latest one because it has not been prepared yet, right? So it really when year it is, but in relations to what type of information underwriters like seeing, it's usually the most relevant ones, right? As well as what type of corporation this is, right? So showing whether or not it's a Canadian controlled private corporation, or let's say, like a public corporation. On the other hand, once you scroll down, this is what they refer to as the T2 jacket. It shows what type of schedules are included in this T2 tax return. So if it was included, usually you would see a little check mark next to it, and that information, that schedule is included with that tax return, right? So, for our purposes and understanding what type of information we really dive down on, I usually say that it's these schedules 9, 23, and 50. Of course, the other schedules provide a lot of good information as well, but I find that from an underwriter's point of view, Schedule 50 is one of the most relevant ones because it really does help them in understanding who the shareholders of that corporation is, right? So if it is a corporation, if for private corporations, does the corporation have any shareholders who own 10% or more of the corporation's common shares or preferred shares, right? So that's Schedule 50 right here. And in most scenarios, when we're obtaining T2s, we require this Schedule 50 just for ownership, tracing that ownership up to the shareholder itself, right? Schedules 9 and 23, it's really looking at, are there corporations that are related or associated with the specific corporations that we're talking about here, right? So that can give us a better understanding of, okay, well, are there corporations in that corporate org structure that we're not taking into account there, right? T2, corporate income tax return, going down the list, T1135, does the corporation hold specified foreign property? So that's actually, pretty important, both for corporations' tax returns as well as for personal tax returns. On a personal T1, you'll have this T1135 as well. If the client does hold assets and at any time in the year, total cost amount was more than $100,000, right? And just for my purposes of looking at this, I decided to include Schedule 53 as an important note as well. Although primarily I'd say that a lot of times it is looking at, from a accountant's point of view, looking at these schedules. Schedule 53 shows that in a corporation, whether or not it has GRIP, so general rate income pool, and that usually allows for, if there is a balance, that allows for eligible dividends to be paid out rather than non-eligible dividends to be paid out, right? But these are some of the important sort of aspects of a tax return that we often look at, as well as gather for our purposes of financial underwriting, right? Now I'm going to jump into understanding corporate org charts very quickly if we have no other questions here. Comments?
No questions, Leon.
So corporate org charts, right? Like I said, one of the very most important things that we usually like to gather and see at the very start, it really helps us in understanding what the situation of the client looks like and how they hold their corporate structure, right? Some conversations that we have, Connie and I have, we hear that we don't see the org chart, but we hear that there is a holding company, there is an operating company, and there is a trust. And, even with those four entities, how it's structured can be very, very different, right? So, like I said earlier, it's very important just to understand and trace out that ownership. So a corporate structure org chart, as well as their tax returns, can in identifying and understanding what structure looks like and help us in, really the value there, right? So I guess, first of all, it's a corporate org chart is a structure or chart that shows the shareholders, corporations, trusts, partnerships in the client's business structure. And it's not an organizational chart that shows a management structure. So things such as who's the CEO, who's the VP, who's the director, managers, or other employees. Accountants and lawyers typically create this corporate org chart to help illustrate who the shareholders are, on the very top of the org chart. So linking it back up, it'll be shareholders or trusts on the very top. Then along the middle line, usually holding companies, and then bottom of it, operating companies or even partnerships, right? So, there's a lot of shapes that are used when it comes down to this. And it's usually good to understand what these type of things mean, just so if you ever see it, you kind of have an understanding of what they're trying to do, what sort of entity they're portraying, right? So, in most org charts, you will see that an individual shareholder is a circle, a trust is a triangle, a corporation is kind of a rectangular box. Partnerships, on the other hand, I've seen ovals, but I've also seen diamonds as well. So that's a little different there. Shares, usually solid lines. trust beneficiaries are dotted lines, right? And that's just, I find that, kind of like a common sort of use of these shapes for the purpose of creating org charts, right? Now, corporations, they're just going very quickly and talking a little bit about each. They are a separate legal entity similar to a person. There are a lot of conversations that we could have, kind of discussions that we could have as to why people create a corporation to run a business, but that's kind of outside the scope of our conversation today. On the other hand, that's a ownership agreement over property split between a trustee having legal title and a beneficiary having beneficial title. It's not considered a separate legal entity. Quebec is pretty different. They do follow a civil law rather than the other provinces that follows common law. And a partnership, on the other hand, is it's a relationship between two people who are carrying on a business with a view to profit. It's also not considered a separate legal entity. Okay, so if we were just looking at, let's say, this as an example of a corporate org chart, just from looking at this, usually it would lead to a pretty good indication of, first of all, what type of information we usually would want to ask for. If I saw this org chart, that, as a first step, it would be good to understand, okay, well, Mr. and Mrs. Smith, T1s, gather their T1s, and from their T1s, we'll have a better understanding of potentially what other income they're earning, so what other personal assets they may hold for our purposes. The Smith Family Trust, the trust deed, potentially a trust return, in order to understand who the beneficiaries are, when the 21-year deemed disposition rule will occur. Holdco financial statements and tax return. Most of the time, it's good to understand what assets they're also holding, potential debts in there. A lot of cases we work with, the holding companies usually involve and include real estate, which has, significant fair market values as well as potentially significant debts in there, right? In this scenario here, there's two operating companies, and really, I think that's where the money is made. It's probably there, and they're going to most likely be pushing up income either to Holdco for income that they do not require to be paid out or used in the capital of that business. As well as potentially paying some out to a Smith Family Trust for distribution, right? How many classes of shares are there, right? So in this scenario here, you can see that there's kind of so Holdco owns shares of the three entities below, but the family trust does as well, right? Why are there two? Well, that's probably, right? Potential could be looking at sale of the business in the future. And if they're looking at sale of those businesses down below in the future, whether or not that, the family trust, since the family trust is owning those shares, they would be distributing those, they would be disposing of those shares that they own. And the capital gain there, whether or not that can be allocated to the beneficiaries there, right? The Holdco itself, why they own the shares, most likely it's for purposes of, when the companies below on that lower level earn enough income, they're probably pushing it up to Holdco, almost acting as sort of a piggy bank, right, in there. Where corporate funds most likely accumulated, exactly, Holdco. If they're accumulating funds that they don't require, they're probably pushing it up there just for purposes of, using that as a piggy bank to buy, let's say, passive investments, right? How does the money get there? Well, most likely through intercorporate dividends. And who pays tax at dividend tax rates? So once again, like I kind of discussed very early on, the corporations usually, when a corporation earns money, they incur one level of tax. Then if the shareholders or whatsoever require the funds to be paid out, they'll pay the funds out to, let's say, Mr. and Mrs. Smith. And that's where a second layer of tax would be incurred there, right? So that tells you information as to, from this corporate org chart, what is kind of going on. And you can see that, from here, there's definitely been planning that's been done. So it's good to understand and discuss with their accountants, right? Is this why this was set up? Are there potential plans or upcoming, plans for, let's say, sales in the future, which could, of course, have a impact on our planning, as well as from this situation here, what type of information should we gather, right? And whose estate might have an issue to address, right? In this case here, it's usually the level on top, right? So I guess, in summary here, fact finding, it's a very, very helpful process where you can uncover needs, opportunities for your clients. Part of that fact finding includes, obtaining the relevant information such as your tax returns, corporate financial statements, and corporate organizational charts, right? These documents are usually easily understandable and are very helpful for advisors who can understand and how to read and interpret them. They help in creating more of a wholesome picture of your client's potentially complex affairs, and resources available to you. I think Connie most likely had covered a little bit about Canada Life Elevate, and all you as advisors have working with Canada Life, so I won't cover that today. But before we do go on, I just wanted to once again ask, is there any sort of comments, questions you see in the chat?
I don't see any questions asked, but a comment from me, Leon, I love that the organization chart that you just show us. Well, it can help advisors to understand. Sometimes clients telling them, we don't need life insurance, we have set up a family trust. But if we can get the org chart, right, and have an idea of what is under the family trust, then we can kind of understand, the setup. Because sometimes maybe the clients don't understand. It's the accountant telling them to do that, right? That's but right. Sometimes when we look at the org chart, we kind of understand, okay, the family trust is basically for the potential selling of the operating company in order to maximum utilize of the lifetime capital gain exemption. But there is still insurance need. For example, when is the family trust set up? The 21 years disposition rules. And the other thing is, what is in the holding company, right? And if there are assets holding in there, there's still tax liability down the road, right? So, I love that. Oh, okay. So there's one Q&A. Sophia, you have a question? You just type in questions. So do you want to put your question in the chat room, or you want to unmute yourself and ask that question? I don't know whether you can unmute yourself because. Okay, so I can't see the question. Maybe if Sophia can type in the question, or at the end when Amber open up, for everyone to ask question, we will follow up on the question that you have, Sophia. Right? So let's carry on, Leon.
Great. Okay, so really last thing that I really wanted to go over today, financial underwriting accelerator. And if you were to ask me, describe that tool in one sentence, it's going to be right here. It's your one-stop shop resource for financial underwriting, right? So this tool calculates your client's future tax projections, income replacement, and other financial insurance needs potentially according to our internal financial underwriting guidelines, right? So, like I said, it's a tool that was created by the CPAs over at head office. They're the financial underwriters, and they found that it might be important just to create a tool just so advisors as well as even staff understand how we come up to certain numbers and what the assumptions and calculation is that is behind and what really drives that number there, right? So, okay, so I see a hand up now. Who's there?
Sophia, can you yourself?
Yes.
Oh, okay, there you go.
Hello.
Hello.
Hi.
Hi. 我想呢 I want to back to the second page 就是那个页面，就是 structure 那个页面。对对对，就是这个。那我的问题呢，就是说这个 family trust 呢，可以呢，它在 Landco、Opco 1、2这3个是 family trust 在做 这个他的 owner。那现在的他还有一个这3个公司 OpCo 公司呢，它上面还有一个 HoldCo。那我的问题是，这个 Family Trust 呢，为什么不直接做他的 HoldCo 的 owner？ 就因为 HoldCo 已经控制了这3个公司，这样看起来好像是不太，就从逻辑上来说，最后还是 Family Trust， 但是他现在他画的这个图呢，Family Trust 并不直接控制 HoldCo， 那为什么不做一个直接控制 HoldCo？ 它有什么
Leon, do you understand Mandarin a bit? No,
was it what?
有点复杂啊。
No, that's okay. I do the translation. So,
Sure.
Sophia is asking regarding this corporate org chart structure. She is interesting to find out the reason why. Normally when the client set up a family trust, the family trust will be the owner of the holding company. So why in this case, it seems like is family trust is separate from the holding company?
That's a good question, and to absolute truth, it's because I created this family, this structure, without kind of planning what was going on. In a lot of cases, holding companies do have, are owned by a family trust as well. In some scenarios, I do see that family trusts will not own a holding company, the shares of it, but rather a holding company would be a beneficiary of that family trust. It's hard to answer that because honestly, it really depends on the client's situation. And, I wouldn't be able to give a fictitious answer as to why I didn't create it that way. It's just a matter of showing it on this slide here, what it could look like. Yeah.
So my is one, what's the beneficiary for family trust? Beneficiary who?
In this picture here, the beneficiary would be the Smith family here.
Oh, not HoldCo, not OpCo.
No. Yeah, exactly.
Yeah.
So once again, I think the question itself was more so based on why this was the case. And truthfully, why this was the case was because I just found structures and put them together just to quickly discuss it. So it's not based on a real case or real client situation.
Okay.
Yeah.
I understand.
Okay.
Okay.
Thank
Next
you,
one.
Sophia.
Thank you.
Okay, so the next thing we're looking at here is this life insurance financial underwriting accelerator tool, right? And like I said earlier, it's really, really helpful for advisors, for me even, just to look at this and have an understanding of how potential insurance needs are justified by our team over at head office, right? So it really starts off relatively simple. It's like a basic policy and contact information, what the policy or application number is, date, advisor's name, contact phone, email, additional comments. Then it goes down to the client information section, who's the actual insured, and background information. So as you go through this, I think that you'll kind of see that in a lot of ways, this reflects a cover letter. And in a sense, it was meant to kind of reflect it, right? To give the underwriters as much information in a select manner as much as possible. So general information on that client itself, then really going down into the insurance needs section. Okay. So, a lot of times after you've collected a lot of that information, let's say they're T1, you've taken a look at what type of income they earn, you've identified that income replacement is a potential need. This allows you to really fill it in here according to the rules and guidelines per Canada Life, right? So what the income source is, say employment, average income, 100,000. And let's say, once again, he's in this age range. So the multiplier would be at 25 times here. So you have an insurance need created. Other things that could be potentially important for some clients, estate tax liability. Once again, estate tax liability, when you click into it, it does show quite a lot of relevant information as to how to fill this out. So things such as if you're looking at real estate, what type of information you should have, right? The property type, name of the legal owner, address of that property, fair market value, mortgage balance. All of that allows you to put this information onto here. If it's a investment asset, such as a financial holding, so things such as non-registered accounts, things like that, or registered accounts, you can put that sort of information down into here as per the statements after it's been collected as well, right? Business and corporations, understanding who, once again, how it traces back up to the overall insured, right? That insured individual that we're looking at here, what's his ownership and how to trace that back down, just to understand what his ownership is, the name of the business, nature of that, the fair market value of the business, and an explanation, if that was to be provided, whether it be, let's say, an accountant, a business valuator, or a valuation report, that can help in really putting that down as to how that fair market value was calculated. And then really understanding asset growth, right? So looking down here, when we're scrolling down, now that we've put down that information, what are the number of years that are usually allowed for that growth, right? So just using, let's say, we'll just use one corporation. Let's say he has one operating company and it's 100%. And, we're looking at the net fair market value here, right? And it's important for me to say, first of all, that the net fair market value, how this PDF works is that, they're looking at net fair market value, which would be your fair market value less the adjusted cost base, okay? If you're looking at shares of a corporation, and a lot of the cases, the adjusted cost base of the shares, if you look at the financial statements, they're pretty nominal. Could be $10, could be $100, which is pretty nominal when you're looking at fair market values, right? So net fair market value, let's say that company was valued at, $10 million, right? Then we're assuming, let's say a growth rate of 4% for 20 years. And at the end of the day, a 26.75% tax rate. At 26.75% tax rate, what we're really looking at here is, the capital gains tax rate, the effective capital gains tax rate, right? When it's a capital gain, 50% of that is taxable. And in our assumptions here, that 50% that's taxable is taxed at the highest marginal tax rate of 53.5%, which equates a tax rate of 26.75%, right? That calculates that tax liability there. And, all in all, it'll create a tax liability. Then you can go on and look at other sort of needs that there potentially could be. So let's say credit protection, debt coverage, they have mortgages in place, right? So what is the debt there? So if we own 2 million of debt, 100% ownership, then it really does calculate that. There's also a premium affordability section. So a section where, depending on after conversations as to whether or not it should be individually owned or corporately owned, then really looking at, okay, well, if we're looking at individually owned, can we calculate whether or not this premium could be potentially affordable for that client, right? So how the affordability calculations normally work, usually they take income as an understanding of potentially how much you're generating in income, which can help in, offsetting the cost of that policy, of course, but also looking at, well, do they have other assets on hand, liquid assets? And if they do, can a certain portion of this potentially be used to pay for that life insurance premium? And really just, it's more of a diversification of your asset from one asset class to another, right? So that is in both the individual and corporate premium affordability calculators. It really derives from two things. One's income based and one's asset based to come to a number to see whether or not that's affordable. So all in all, at the end of the day, it does, provide you with a good summary as to, okay, from the sections above that we've calculated, what is the insurance need that is generated from that, as well as whether or not we have in-force amounts already for their purpose, and comes up to a sum of total needs, which usually, that can help in the application and showing why the underwriters, why a certain policy was applied for, right? So, yeah, going down, then it's really just, potentially additional comments or explanations that you may have for that client themselves, and signatures down below. I know that I did cover this relatively fast. This is probably something that, it's a good idea if you guys have cases, just to kind of go over this, see how it works, and work through it. If there are questions, we could also reach out to our team, and, we could help out with those type of questions. But I do really highly recommend this tool. I find that it is very helpful. Even if drafting a cover letter, just kind of using this tool as almost like a backbone to come up to the needs before putting it on the cover letter itself, right? So yeah, Connie, was there anything else you wanted to add in relations to this financial underwriting accelerator tool?
So maybe I just speak a little bit in Mandarin so that everyone can get an idea about this financial life insurance financial underwriting tool. 大家这个 tool 呢，基本上就是我们的 financial underwriting team 给我们做出来的一个工具。那这个工具不是说你们一定要每一个 case 都去用，不过很多时候Leon 跟我呢，如果碰到你们有一些，我们要帮忙去计算那个去 present 给 underwriter 的话，这个 life insurance underwriting tool 呢是一个我们叫做 one stop 的 resource 为什么呢？因为它里面你可以看到它包含了好几个东西。第一就是说呢，我们的那些 underwriting guideline， 譬方说刚才那个 income replacement 的 multiplier 了。然后如果要计算那个tax liability 的 growth period growth year 这样的东西了 growth rate 这样的东西了，还有就是说呢，你看到里面你可以打一些东西进去就好像我们做 covering letter 所以如果你用这个工具的话，你不需要在那个 advisor website 里面去找那些 underwriting guideline， 你也不需要另外再写一个 covering letter 因为在这里additional comments 的 area 你们都可以打进去。然后最后就是说呢这里我们看到是需要客人签名，所以呢尤其是一些 case 呢，你知道超过500万到1000万这个 total line 呢的 coverage 的话，我们都会可以给客人呢签份叫做 financial supplement form 来代替发一些supporting documents 的那如果你用这个underwriting tool， 客人在这里呢签了名，因为你上边已经把客人的assets ability 你都把它列表出来，然后客人在这里签名的话，其实呢这一份也可以代替了这个 financial supplement form所以呢尤其是一些 case 超过500万到1000万本来我们是需要客人另外签一份叫做 financial supplement form， 那如果你用这个 under 已经可以包含在里面，就不需要这个 form。 那当然比较高的 coverage 超过1000万以上的 total line 呢我们一般都可能会需要一些 supporting document 比方说如果是房子的话，可能就是 BC assessment mortgage statement 有一些 investment portfolio 就是那个 investment 的 statement 这样的东西。 OK yeah, so Leon, sorry, I just speak in Mandarin to explain to them a little bit about how we use this underwriting tool. For most of the time, we use it to calculate insurance need in general, and then we also can use it to represent the financial supplement form as well, because the client actually need to sign on this form with all those breakdowns, right? So it is a one-stop resources of all those underwriting guidelines, covering letter, as well as financial supplement form if required. But for sure, if for cases with a higher coverage over 10 million, there may be some supporting documents that require to attach, right, to this form as well. Yeah.
Exactly.
Okay. I don't see any other questions in the chat room and Q&A. But we are happy to open up. If any one of you want to ask questions either in English or Mandarin or Cantonese, feel free to do that. Okay, so there's a couple of hands up. Sophia, I think we all question. Leslie, I think you have the same question as Sophia. If not, just unmute yourself. And then I also seen Sing Liu. You have your hands up. Do you want to unmute yourself and ask the question?
您好 ，Connie。
您好。
Hello, Leo. Can I
Hi.
just ask ask question in Mandarin because I want to speak clear for my question.
Yeah, no worries.